NFT trends and cycles. Trends and cycles are the cornerstone of the NFT world, and for good reasons. The first thing you need to understand about NFTs is that it's an illiquid market. That means, unlike Bitcoin, for example, there is no liquidity pool where you can instantly buy or sell from the push of a button. Selling your NFTs might take minutes, days, or even not happen at all. Demand is far smaller than other asset types like crypto and stocks. Now we know this, there are some notable trends and cycles that can help you become successful in the NFT world. Let's go over some of them from the most obvious to the least obvious. Buy and hodl. Holding an asset can be the highest financial reward possible when it works out. If you minted a Bored Ape and held it all the way to today, its floor price alone could change your life. Also, the following collections that were airdropped to the holders of the Genesis Bored Ape could bring you further wealth. The Mutants, the Dogs, the Apecoin, and Other Deed. All these follow-ups collections could be worth hundreds of Ethereum combined. This type of return is extremely difficult to generate from quick flips and will often generate losses as well as wins along the way. Very few projects make it to the top like Bored Ape, but high conviction in a project like this could change your life in the space of a few years. The hard part is to understand which collections have the best chance to give you this kind of returns. And let's be clear, there are very few of them. And as you can see, that growth takes months. But if you manage to identify those early, you're in for some real gains. So what to look for in an upcoming collection? Great founders. You should bet on builders, not empty calorie marketing. Teams that value their communities and want to reward them with true utility. Community? Well, if there is no community, there is no project. Check for the biggest communities to get an idea of where the action is happening. A good way to do that is to see PFP adoption rate, for example. You can check on NFT Inspect which PFP collections are the most represented on Twitter. And usually that goes along with successful collections. Do the research. There is no secret. It's all about the research and applying everything you've learned in this course so far. You can't lose money on the sidelines, and it's sometimes better to not trade than trade in a rush. Take your time to do the research. Avoid FOMO at all costs. If you feel the FOMO, it's better to go outside and think for a moment. Before buying upfront, can you place bids first? Every small saving adds up over time. Ask yourself, is this project likely to be more valuable in 2, 4, or 6 months from now? Never copy trade influencers. They don't tell you when to exit, and you may just be the exit liquidity. Roadmaps are just marketing. Is the team solid, doxed, and looking to push for the long term? Follow the meta. It's important to understand the current meta at play in the NFT space to maximize your opportunities. It usually starts with a very successful collection launch, bringing something new to the market, which will inspire derivatives, but will also start a new trend. For example, when CryptoPunks launched, they created the meta of the 10K collection, a fixed mint price, although it was a free mint in their case, and a focus on PFP and community. And in a way, we can see that this meta is still going strong. When Azuki launched an anime-style PFP, they were the first successful anime project. And we saw dozens of other projects creating their own anime. But we had a strong meta when this type of art was in high demand for a few months. Play to earn has had its moments as well, with dozens of projects coming out with their own tokenomics and games. There are many trends like these throughout the year. And when a trend becomes a temporary fashion to the point that everyone wants to be involved, you then have a new meta forming. Buy the rumor, sell the news. This one is a little bit more tricky as rumors are rumors after all, but it happens more often than you would think. We can take an example here with Cat Blocks, a collection that released in February 2022. There was a big rumor that came out due to a hint on a marketing video where we could see something resembling the Puma logo. On top of it, Puma had bought the puma.eth ENS domain that same week and had also bought 2 Cat Blocks. Rumor intensified that Cat Blocks was going to partner with Puma, and things went wild. Buying the rumor and selling the news is a very effective way to ride momentum if done well. The best exit strategy is to sell just before the official news, as we then usually see a strong listing pressure as people are trying to exit the momentum pump. Easier said than done for sure, but even listing right away when new news comes out is often a great exit point. NFT cycles. NFT cycles are key to any market. So let's dive into what cycles are, what trends tend to happen, and how you can play with the cycles, bull or bear markets. Cycles help you determine how to rotate your assets. Your strategy should be different in a bear or a bull market. And most importantly, you should be able to tell what market you're in. Bull market. So what's an NFT bull run? In simple terms, it's the gold rush. Any newbie could throw money on an NFT and get 2, 3, or 5x return. This usually happens in adoption waves, when we have plenty of newcomers who don't know much about NFTs and come in masses, creating some overhyped market. Bull runs are usually short-lived, so if you see one, make sure to take advantage of it and remember to take profit, both in Ethereum and fiat. Now, what's a bear market? Well, it's the days where even the best projects get crushed, no matter how well they execute or deliver on their roadmap. Projects with no real roadmap and structure become worthless, and all the pumps you saw in the bull market are only a distant memory. Liquidity is hard to come by as the number of investors tend to decrease significantly. The people who only came in the NFT space for a quick profit are leaving, calling it a day. Previous day trend. This one is a tricky one, as it goes against the mindset you should have for most other asset classes. But in NFT, if the floor goes up or down, then there is a high chance that the next day follows that same trend. In crypto, with Bitcoin or Ethereum, we do not see that same type of trend usually. Buying the dip on Bitcoin usually pays off, and the same goes for selling on the pump. For example, this chart shows the trend for Clonex. If the floor went up today, there is a 55% chance that it goes up the next day. If the floor goes down today, there is a 48% chance that it goes down tomorrow. CryptoPunks is even more accurate in this case, with 48% accuracy on the uptrend and 57% accuracy on the downtrend. You may wonder why those numbers don't add up to 100%, by the way. That is because sometimes the floor will remain flat and those trends would not apply, but it's very rare. So why would this be happening more often than not? Well, it's difficult to say for sure, but the NFT market is quite an illiquid asset, and sales and buy take a bit more time than other asset classes, which could explain why the pump lasts 2 to 3 days. It's not a guarantee though, but the statistics show that playing momentum improves your odds. We have now covered all the key points that influence buyers and trends. Let's quickly recap the key takeaways. Buying and holding can be the best long-term value, but there are only a few projects that will deliver long-term. Choose them extremely carefully. Follow the meta. The NFT space moves and moves fast. Metas don't last long, but they are a great wave to ride. Buy the rumor, sell the news. Unfortunately, hype generates more volume than actual utility. NFT cycles. Bull and bear markets come and go. Be ready to play hard in a bull market and save up in a bear market. Previous day trends. If it pumped yesterday, it is likely to pump today, and vice versa. The trend is your friend until it's not.